CEO and Managing Director of Axis Bank. Mr. Chaudhry, good morning. Thank you for joining us. Mr. Chaudhry, last time when we spoke, we were coming out of a partial lockdown. You were in middle of a fundraising. So if you have to share the big picture with us, has bad become good or bad has become better? Is there incremental change or there is a marginal change in things?
So, it is not such an easy answer across a lot of metrics. If you, observe the trend line, you will see that bad is actually looking much better. And in some cases, the bad is not improved enough for you to say that, okay, things are going to only get, very good from here on. Generally, the trend line is going in the right direction. In some cases, it has started moving at a fast pace. In some cases, it's slow. It is also, the government and RBI is trying very hard. They realize that the economy does need to be revived. So given their resources, they're trying their level best to firstly ensure that the people who are marginalized are supported. The industries which are suffering are supported in some form or shape. Similarly, the banking system is given some leeway to support some of these borrowers, both individual and corporate. But I think it is a long haul. We are operating anywhere between, depending on the industry sector, 70 to 80% of pre-COVID levels. Please understand and appreciate that even before the COVID crisis hit us, the economy had slowed down and was slowing down. So when we compare ourselves to pre-COVID levels, the growth rate of the economy was slower than what we have seen for a long period of time. So just getting to the pre-COVID levels is one milestone, and then getting on the growth path, all of us are getting used to in India, would be the next milestone. So we have some distance to go. A lot of things in play. I do believe, and as I talk to the business leaders, the confidence is returning, slowly, gradually, but it will take time. And I think we are talking about somewhere between first and second quarter of next calendar year before things hopefully will be back to normal.
Conversation started, or are you also at the bank level eager to participate? I mean, there was an almost shutdown by banks. They were not giving any credit for obvious reasons. Have conversations started both ways?
Yes, I mean, we had never shut down really, but yes, because of the COVID crisis, it was very difficult to predict, understand and appreciate, where the corporates and the individuals were going. Because at that time, why would you need additional money? The only reason would be that, you have a bit of a liquidity crunch. Otherwise, no one was really using the money to invest. It was more about refinancing or trying to manage a liquidity crunch, or you needed the money because your, business was shut down and you needed to pay your salaries or pay your debtors, whatever that might be. So obviously, every bank was looking at any proposal extremely closely. Now, the working capital cycles are kind of coming back. Some of the companies have started seeing the volumes move up. So they are obviously looking for additional monies because they want to refinance. Interest rates have come down, or in some cases, they are expanding capacities, though not that much. In some cases, they are revving up the plants or finishing the capacity expansion, which they were already undergoing. So, yes, the activity has started coming back, though still, as you would have seen all kinds of articles on where we stand today, we are, as I said, it's somewhere between 70 to 85% of pre-COVID levels in terms of overall activity. Credit growth will still take some time to move, because if you look at the first couple of months' data, it very clearly shows that the credit offtake is actually reduced rather than increased if you compare it similar to the period last year. So from that perspective, we are seeing a credit offtake go down by 34,000 crores between 24th April and 31st July, against it going up by 88,000 crores during the same period last year, or going up by 1.34 lakh crores in the same period in 2018. So, as I said, it will take some time for it to normalize.
Mr. Chaudhry, let me address something which is of immense market curiosity. Private banks were the darling of the stock markets. They are no longer the darlings of the stock market. Long-time investors, in a sense, are trying to understand that if banks don't need capital, why have they raised capital? And it's not just Axis Bank. All other banks have also raised capital. Is this an indication that banks are preparing to boost up their balance sheet because they expect lot of NPAs, lot of problems, and lot of moratorium issues, or banks are simply playing it safe and they're raising capital when it is available, not they need it?
So we had raised 12,500 crores in September of last year, which we said was for growth. This time it was more of a confidence capital of rupees 10,000 crores. We have during this period made excess provisioning of close to 7,000 crores to ensure that we sailed through the COVID crisis without any problems. So while we were well capitalized even prior to the raise, and in between we have made additional provisions, and our earnings are, were well covered for the pandemic risk as indicated by our risk model. So it's not that before we raise the capital, our risk models are indicating that we need more. But I think the stakeholders at large, including the regulator and our depositors, the investors, would like us to be in a very, very comfortable position. And then we went ahead and raised this so-called 10,000 crores of COVID capital, which I think all the other banks have also done. Our view is that it just improves, significantly the bank's ability to deal with unanticipated contingencies and market disruptions, which might still arise due to the COVID-19 pandemic, and for general corporate purposes. My hope and sincere hope is that our September capital was for growth purposes, and this capital will also be used for growth. Now, when the economy comes back to normal, we would be in a very good position to be able to use this capital to provide, obviously, credit to all kinds of borrowers, and the capital will be consumed for those purposes. Because, as I said, we have a sufficient capital to take care of any provisions that might be required because of the COVID crisis. But people do expect banks to be safe. They do want to trust the banks and not worry about the money being under any kind of stress. So it was important that the confidence capital be raised, and that's why a lot of banks are doing exactly the same thing at about the same time.
So, can I safely assume that talk of another capital raised by Axis Bank from a P route is something which we can put it on back burner? Because that's going to just give a sense as to you really don't need capital.
So what we have said is that we have an approval from our board and shareholders to raise up to 15,000 crores of capital. We have raised 10. We have room for another 5,000 crores. We are approached by various investors at all points in time about investing in Axis. We will keep our eyes and ears open. If the right structure, with the right price was to come along, why should we not engage with a long-only investor if the deal made sense? There is nothing to report at this stage, but we have the approval for a year, and we'll keep our eyes and ears open for any transaction that might come along. And that's exactly what we've been saying over the last couple of months, not only publicly, but to all our investors also.
Mr. Chaudhry, let's talk about moratorium. And, the moratorium window, sir, will get lifted in next 2 weeks. Everybody is so curious and anxious. It reminds me, it's like board ke exam hone wale hain. The moratorium numbers have been shared, but why is there so much of anxiety amongst investors as if, something is going to really blow up after the moratorium window will lift? I mean, I'm seriously saying it. It's like everybody's nervous as I was nervous when my board exams were on.
So there are a couple of things which are driving it. First is that the Morad numbers in Morad 2 are lower than that of Morad 1. But even if you look at Morad 2, if you look at the range of Morad numbers which are being reported, in some cases they're quite large. Secondly, people are using different definitions to report the Morad numbers. So there is some anxiety on the part of investors that, frankly, do we really know enough behind what is behind these Morad numbers? Third is that there is a category of borrowers, because they're all reporting it as of a certain date, and they don't know what is happening after that date. And now RBI, rightly so, has approved a restructuring format for both individual and corporate borrowers. And as a result, that even under the restructuring, because the kind of a 2-year window has been given and all kinds of restructuring can be given within that framework, the investors believe that maybe a lot of the borrowers will go into restructuring, and that could potentially be seen as kicking the can down the road rather than recognizing the provisions which should be taken upfront. And that's where this, because it is a bit of an unknown, because you don't know exactly what is behind the numbers, this anxiety and this speculation is coming in. And that is maybe one of the reasons also why the bank stocks have suffered more than some of the others. We are at the forefront of, lending to the economy. Economy has suffered a severe shock. So obviously, they assume that the financial system has to, bear a part of that shock. And it's very difficult to predict the numbers which are going to kind of pan out in the next 18 to 24 months. I think people need to, when they look at restructuring, they need to look at two things. One is what is right for the customer, and then second is what is right for the bank. That is, how does the bank de-risk itself? And I think these two questions in my mind are separate questions. In that regard, I would believe that as a bank, we need to stand with the customer and look at whether they need the restructuring. And if they do need the restructuring because they're impacted by the COVID crisis, as someone who's operating the economy, we need to stand with the customer and support them. So that is one part of the answer. But the second answer, which is about how the bank de-risk itself, I think as a bank, at least as Axis Bank, we would like to continue to take provisions as per pre-COVID norms rather than take the dispensation which RBI has allowed under the new restructuring policy, because it is important, we believe, for us to stand in the zone of conservatism, to stand and take hits upfront so that when the economy opens up, we can, start focusing on the future and lending and grabbing growth opportunities rather than still trying to manage, the restructuring crisis and the provisions that have been made under that, and so on and so forth. So we want to recognize the problems up front, move on, and be ready for the opportunities as and when they arise, because they will arise. When the economy opens up, there will be huge opportunities to be out there in the marketplace. There will only that many banks who can afford to lend at that point in time because they'll have the capital, and we want to be one of them.
I'm going to be specific about some questions on Axis Bank. And one, normally as market commentators, normally as editors, we always try to look at the fine print. And one such fine print which a lot of people are trying to understand is that which way structurally your cost to income ratio would move. Now that digital adaptation is coming in, interest rates are changing, is there going to be a structural change in your cost to income ratio? Because that is something which will change a lot of your assumptions for next couple of years for your shareholders.
So, when we had announced our kind of strategy in Jan of 2019, we had talked about cost to assets as an important parameter we want to focus on. We did not focus that much on cost to revenue because our credit costs have been higher and they tend to distort the numbers. So we said, let's stick to cost to assets for some time. And at that time, it was 2.15%. We said we'll bring it down to 2. We have, in the last 18 months, moved rapidly to that number. Actually, in the first quarter of this financial year, we had hit our target of 2%, though it was partly held by the COVID crisis. Yes, as you very rightly pointed out, we do believe that there are huge opportunities to adopt technology and obviously look at every cost item of ours and ensure that our cost structure moves in the right direction, which is that it should be lower than 2%. Once the credit cost stabilizes, we obviously want to be operating in the zone of 38 to 40% as cost to revenue. We believe that this franchise is large enough, has the ability to get to that number in the time frame that we are envisaged, and we are very confident we will get there. So, we do want to be, we have a target in mind, and the pace at which, we have moved in the last 18 months, I'm very confident that we'll be able to achieve the target, very soon on a kind of a permanent basis.
How exactly do you think this COVID crisis is going to be rebooting branches, branch cost? Things are migrating. Work from home is a reality. IT companies are talking about adopting people working from home, which is going to reboot the SG&A expenses permanently. Axis Bank also has fixed cost, has variable cost. Are these long-term structural changes which you have adopted in order to control cost for the quarter gone by? Do you think they would be implemented now permanently?
My view is that, yes, obviously this gives us an opportunity to relook at not whether we want to open the branches, but whether we can actually look at what the branch of the future would look like. Because from my perspective, it is very, very important that we do have a physical presence which the customers can see, touch, feel, and say that, yes, this bank is invested in our locality. So I don't think we will see a situation where branches are not required at all. I think a physical presence is required. Maybe the size and the format of that physical presence will change. Right now, a lot of the branches serve as service centers. I think that can be reoriented to become more of a sales office. Obviously, you will provide service there, but can be reoriented to become more of a sales office. And most of the servicing of the customers should be done using digital means, even if they walk into the branch. So in Axis Bank, we are obviously trying to reorient the branch of the future into obviously smaller formats. We're trying to reorient it to become more of a sales outlet rather than a service outlet. And yes, there are enough parts of the country where we would like to, have a physical presence. But after reaching a certain size and scale, I think the rates of adding branches would definitely slow down because technology will be so ubiquitous. Customers will be so used to using the digital solutions that I do expect the branch visits to come down, especially for the younger population. And we need to be cognizant of that. And obviously, we need to keep adding more and more features to our digital platform so that customers don't need to come to a branch and, stand face to face and get their problem solved. They can get all their problems solved using their mobile device. So there is the change is going to happen. It will take some time. But not only us, I think every large bank is working towards, bringing this change in a very significant fashion as we move forward.
We've seen a massive market share shift from PSU banks to private banks. Now, are we likely to see a very accelerated change towards private banks? The top 3-4 banks will gain disproportionately, A from NBFCs and B from smaller private banks?
I think any crisis of this kind does speak to stronger, well-capitalized players because they can manage the crisis well. They can raise the capital necessary to ensure that, when the market or the economy opens up, they have the requisite capital to grow easily. And they can use this opportunity to also continue to invest for the future. So yes, you're absolutely right that whoever is capital constrained or whoever has asset quality issues which will require them to focus on solving those issues, I think they will not be able to execute that well. And because their focus is somewhere else, the stronger institutions will be able to capitalize more and take market share away from them. I think that is a reality which is not only true in the banking industry, but it will be true across every industry post the crisis.
Okay, before we wrap, I'm going to go back to the big picture question once again. I don't want to get this one wrong for our viewers and for your shareholders. If I summarize by saying that FY21 will be a tough year for the credit growth and for the banking industry and for the economy. So the real way to look at banking industry and especially Axis Bank is that we should start focusing on FY22 second quarter or third quarter to understand the real picture, because up until now it's going to be restructuring, moratorium, a lot of here and there, and the clarity will not emerge.
Yes, I would say that this year is going to be a tough year. I mean, we know that in the second quarter and third quarter, there are a lot of data which will start coming out of restructuring. And people will be very focused on that as to who's getting restructured, what is the amount. People need to take hits up front. Some of them might kick can down the road. I do believe that with so many vaccines in development, there is a kind of an end date or an expiry date to this crisis, because once the vaccines come in, I think the economy will start reviving at a much faster pace. And the comfort the people have, will increase dramatically. The anxiousness will go down. And if we assume that there's an expiry date, I think next year, things should start looking up in a meaningful manner. And at that time, yes, the banking industry obviously will benefit from that revival of the economy. And it will benefit immensely once the economy starts reviving.
Do you worry about the retail consumer? Retail consumer up until now has showed us willingness and ability to pay up the loans. But we've not seen a bad retail cycle after 2008 or 9. I mean, it's been 10 years and retail delinquencies have not been there, corporate delinquencies have happened. Before we wrap, do you think that is something which everybody's undermining?
Yeah, I think I think this time people will see bigger problems on the retail side rather than the wholesale side. The economy has, got a severe shock, and it applies. The shock is across the corporates and the retail sector. There are a lot of people who have lost their jobs, lost their businesses, are seeing salary cuts, or are going through real anxiety in terms of how long will they survive in the jobs which they have. We are seeing, the curtailment of access to a great extent in the service sector. So I think that, yes, during the retail cycle, people are looking after a long period of time. And, if you look at the whole range of financial institutions, you will see banks, strong banks on one side who have, hopefully have better portfolios, and obviously they're charging lower interest rates. And then you have people who are charging very high interest rates and their loan to value, etc. So you will see clearly a retail cycle in the next quarters to come. And yes, I mean, it will continue to impact the results of some companies for a long period of time. Some of the companies might not be able to survive through this crisis also.
We are talking to you after a gap. Let's hope that we get a chance to interact with you very soon. Thank you very much. I've got so many questions which are unanswered, but I don't want to extend my appointment with you because I know you've got a busy day ahead. But thank you for your time. We've almost done half an hour with you.
So much,
Have a great day ahead, and certainly hope to see more of you.
Thank you.